Good afternoon, everybody. It's Thursday, May 2nd, and I'm joined here this afternoon with Ryan Detrick and JC Parets All-Star Charts. Great to see you, fellas. What's happening?
New high, Phil. Bull market.
New high. So we had a mirror image today. The SPX closed within 3 teenies of where it closed 2 days ago before it got killed. So it got killed yesterday. It ran today, almost a perfect mirror image. Detrick, is there any meaning in that symmetry?
Well, I don't think so. I think there's just a lot of frustration to a lot of bulls and bears, but still, bigger picture, what do we have? Well, we've got new highs happening. That's always bullish. Technically looking at the market, we've looked at the 40-day moving average for a while. Since December, that's been support. And if you look at it once again, that's around 1565. As long as we stay above that, the trend is your friend. Historically speaking, we all know selling may go away, a lot of fear we can get into, but hey, we're making new highs. A lot of the right sectors, housing specifically, starting to lead us. We wouldn't jump off the bullish train just quite here.
Okay, so for my audience, just so you know, Detrick has been bullish for the majority of this move, steadfastly. He weakened. He had his, Book of Job moment one time in February, but besides that, he's just been a bull, and he continues to be, and it's basically proved me wrong. Okay, so JC, how about you? Ryan's talking about 1565. You've been talking about 1570, right? As the level that's a devil.
Yeah, that was resistance. We 1575. Give it a little room down 1570-ish. We talked about it last week that if we held those lows, we'd feel a lot more comfortable with our longs and putting on new longs and things like that. And sure enough, we came in this week. We didn't even get down there. We just started rallying right off the bat. So now, obviously that support is still important to us. And then to the upside, as we keep approaching this 1600, whatever, 1597, 1598, the 1600 level is a big barrier. But we keep testing it. Eventually, if we do break out, that might be a good floor, in the future down the road that we could be discussing. So I think it's a good level.
Does LinkedIn, LinkedIn has been a leader. Does LinkedIn down 15 on the number matter at all?
Not really. It's where it was a few days ago.
Doesn't matter at all. Okay, so let's move on. I have another question. Ryan, here's my question for you. The long bond has held up unbelievably well, and JC and I have been talking about this for like the past month. It's been holding up incredibly well, and it's a pattern that is unusual, given usually there's a negative correlation with the long end in the market, at least in recent history. Is there anything to make of that divergence right now? Is that telling us anything? Is there any secret global economic message in that or whatever?
As Schaefer's, we think it simply looks like the world wants to own U.S. assets here. It could be as simple as that. And you're right. Historically speaking, we know when bonds go higher, usually the market goes lower. We did a study just this week that when the TLT, 20-year Treasury, breaks out to a 3-month high, and the S&P breaks out to a 12-month high in the same week, which is what we just saw. That's extremely rare, and I'll get the numbers for you right here. It's only happened 6 times over the last decade. And in the near term, it's actually, what is the smart money? Well, the smart money looks like actually bonds. The S&P 500 down about 1% on average a month later. 6 months later, only up 1% versus the TLT a month later. It's up slightly, but 6 months later, up 4%. So, it's just one neat stat. But again, it doesn't mean it has to happen. It has to be that way. But, there is definitely, if you're bullish on stocks, the action in the bonds, it is concerning for sure.
Yeah, and so, copper's gotten crushed and so forth. But I like that theory regarding, U.S. assets. It's just where it's at.
Yeah.
Okay, so JC, serious question. So you've promised me, so you've been a Miami Dolphin fan since before you were born, supposedly, and you're telling me that if Tebow goes to the Dolphins, you're going to be a Bengals fan? What?
I'm done. I'm done. It's over. I'm retiring as a Dolphins fan if that happens. No, yeah, Phil, I was at the AFC Championship game back in the day, the famous one, San Diego and Miami, double OT. My mother and father were there, and my mother literally thought she was going to give birth in the Orange Bowl. You remember the Orange Bowl? It literally used to shake. And I was born a few weeks later, actually. So, yes, I've been a Dolphins fan since before I was born, and I'm willing to change if that happens.
Well, listen, Detrick, you're telling me you got that you have season tickets, so if Tebow goes to Miami, we're gonna bring JC up to Cincinnati. Not till it gets cold. We're gonna bring him up there, and we're just gonna go to a ball game, and we're gonna party. We're gonna bring him to a Steelers game, and we're gonna root for the Bengals like crazy.
Hey,
hated Pittsburgh Steelers.
The Bengals-Steeler game is actually a Monday night game this year, and I've got seats in section 154, so you guys show up for a Monday night game. That'll be a blast.
It's a JC. There could never be a greater road trip than that right there. We're going to Cincinnati. Okay, but seriously though, get back to the action. Ryan, what do you love here more than anything? What's your favorite? What's the trade that you're pounding the table on right here?
Sure. One thing I want to touch on real fast before I get to that is, wholesale may go away. That's been hammered, and, there is some definite truth to that, but the contrarian me wonders if, it's very played out. Historically speaking, when you're up the first 4 months of the year like we just were on the S&P, we look back the last 30 years, Phil, it's only happened 5 times, and May actually is pretty strong, up 1% on average and about 2.5% the median returns. So, lots of ways to slice and dice this, but again, we've been here before, and there's an old saying, we were in New York, all 3 of us at the MTA meeting, buy in May, make some hay. We look back from 1900 to 1950. May was kind of weak, but June, July, and August were actually the 3 strongest months in terms of return. So, this whole thing goes in cycles and circles, so don't just blindly sell in May and go away. There's some stuff that says, hey, we could go higher. And with that, we continue to be bullish to U.S. consumer here. I know all the concerns that are out there, but look at the XRT. It virtually is close to, right to about a new all-time high again. Retail stocks continue to do well. Chipotle is one of our favorites. Strong price action upwards, good momentum. What do I like about it under the surface, though? Good chart. There's a lot of puts coming in, a lot of shorts on it. We like that. Housing, we've liked that sector for a long time. Once again, that's probably the only sector off the top of my head that's had good earnings and good guidance. The guidance has been poor, but once again, you got some positive things there. So housing, retail names, we still think that's the area you want to be overweighted in. Even though a lot of people doubt them, you buy expectations, not prices. Expectations are still a little too low, in our opinion, on those groups.
The U.S. consumer is ironclad. It's just unbelievable. You could throw anything at them. It doesn't even matter. We're just still buying. We're still going to buy. We don't even care.
That's
so
right.
JC, pounding the table. What do you love? What do you just love here?
Right. So you and I, we've been talking about this Asia Pacific stuff, right? We talked about the Singapore breakout last week. New 52-week highs today. Philippines, new 52-week highs. That whole area of the globe continues to do well. A similar breakout to that Singapore, though, out of that region is United Kingdom. That broke out last week as well. We're in that. We actually added to the position today. iShares has a good ETF, EWU, and we like clean breakouts. And it doesn't get cleaner than that. And then getting back to what you were saying in terms of treasuries and the strength, so Ryan Detrick, as usual, with the killer stats, right?
He's a freak on that, by the way. He's got I hear over at Schaefer's, they got geeky Oompa Loompas who just spend the whole day running all kinds of numbers.
It's awesome. It's awesome. But regarding the treasuries, we're seeing, as Ryan said, buying of U.S. assets. We're seeing money flowing into U.S. Treasury bonds and U.S. stocks at the same time. Look at that correlation between commodities and treasuries. All year long has been negatively correlated. So the great rotation that we keep hearing about out of bonds and into stocks isn't that at all. It's actually been out of commodities and into bonds.
Great point. That is a fantastic point. Okay, so that's a great point, actually, by the way. I hadn't thought about it that way. Even I saw the chart you posted earlier, too. I didn't think about it that way. So, Ryan, moving back to you, what do you hate? What's one area you would avoid or be shorting?
Sure. It kind of works out well what JC just said about commodities, because coal's an area. I know it's down a lot. We just bought some more coal puts today on A and R. What we like about coal is the fact it's going lower. That's simple. Everyone can see that. But again, when you dig a little bit deeper, coal actually, we break it down in the sectors. There's a lot of buys still from the analysts on coal. So from a bigger point of view, things bottom at despair. We think analysts have been defending coal the entire way down. Also, a lot of call options continually coming in on these stocks. It's neat to try and catch that falling knife. It looks good when you do it. But to us, any and all bounces, we're continuing to buy puts or outright short a lot of these coal names. We just don't think there's enough despair. It's not the end of the world. A lot of these very well can continue to go much lower, in my opinion.
Long Tesla, short coal would have been a great play.
Yes,
hey, okay, JC, what do you hate, man? What's just so ugly, Theo?
Well, to your point, long anything short coal has been a great play, right?
Exactly.
You and I, we've been talking about short coal and metals and all these things. So I'm obviously, I can't disagree with Ryan. He makes great points. It's interesting what he said about the sell side analysts, though. So to his point, we've been talking about the weakness in Latin America, all year long, and we don't think that's changed. On an absolute basis, we really don't want to get squeezed because if money starts rotating in there, we want to make sure that we're protected. So we actually have a long Europe. FEZ is the Euro Stocks 50. So along Europe, short Latin America, ILF. So we still want to stay away from ILF, stay away from Latin America, be short that space, but be hedged by being long Europe. And it makes sense to us because we've seen a lot of money flowing back into Europe, with Italian bonds making new 52-week lows and Spanish bonds and new lows, German bonds hitting new lows, yields and the bond prices making new highs, obviously. Money's flowing back into these European names. So we'll be long those, and we'll be short Latin America against it.
Hey, Ryan, Detrick from the Great Schaefers and JC Parets, Eagle Bay, All-Star Charts. Great having you guys here this afternoon. We'll do it again next week. We're doing this a day early because I'm heading out of town. But it was great seeing you guys, and thanks so much for hanging out.
Sure. Thanks, Phil. Good seeing you, Ryan.
Appreciate it. Thanks, guys. See you soon.
Adios, fellas.